Let's take a look at some information and charts on Cardano for BraveNewCoin. So Cardano is currently a proof of stake platform with an interesting degree of decentralization. They're trying to make their way towards fully decentralized. They have an extreme roadmap, which, and if anyone's interested, can go in and read all about where they're at on the smart contracts side of things or governance or what have you. Most recent announcements have been smart contract related, NFT related. Still nothing that I can see so far. They do have NFTs. I don't know how they are accessible. I looked into this. I don't know how you can transact with them other than on the wallet, the main wallet. So I haven't seen too much about it. I just saw that there was some pre-sale. It sold. This was before smart contracts were even enabled. And I don't know exactly where that stands now. But the other DeFi related stuff, lending and borrowing or anything like that, as far as I know, isn't on the network yet. And if it is, I can't see a lot of people using it based on the on-chain data, which I'll take a look at. And I have to say this every video, not because I'm hating BTC Maxi or anything, but I just want people to know. This thing has been in development since 2015. Did a pre-sale in Asia, and it's been publicly trading since 2017. Most of the pre-sale was in Japan. So they're just starting to unincubate themselves and produce real stuff, at least an opportunity for real stuff. We'll see if anybody shows up or if it'll just be an empty cathedral. So when you're looking at staking stats, you want to look at validators, the percentage of the chain being staked. The staking rewards, is it competitive? Are the validators located dispersely geographically based on interest? Are they all exchanges? Are they all VCs? The pools, for the most part, actually look pretty decentralized. Not any super recognizable names, which is honestly a good thing. You'd have to go through the list like closely and look how much percentage is exchanges, but from what I can tell, it's not that big of a deal. So the decentralization on the proof of stake side of things is pretty high. The protocol level decentralization, I don't think is completely there yet, which again is fine as long as people realize that. I don't care what it is, what it is, right? As long as you realize what you're getting yourself into, that's all I really care about. And if we look at the staking wallets, they did actually perk up quite a bit recently, and we see this with on-chain stats measured in other ways as well from Coinmetrics. I'll take a look at that in a second. But so that this is bullish for anything. To see rising anything week over week, month over month, certainly bullish for the token price. The adjusted staking reward is less than or equal to USDC or stablecoin yield on ETH DeFi. So if you're bullish Cardano, any reward staking wise is just a bonus, icing on the cake. If you're bearish or you're afraid of volatility risk, most likely you'd rather just collect interest on a DeFi application. Now, if you think DeFi is going to collapse because of regulatory stuff, then you are probably participating more towards staking rewards than DeFi. There are risks no matter what you do, as long as you're aware of it. That's all that really matters. Transaction counts are at all-time highs and still rising. So this is another way of showing, yeah, those active staking wallets are definitely playing a role here in transaction counts. Transaction values declining as well, just slightly, but generally have been ranging. If we zoom way out on transaction counts, I mean, it's a new chain, right? Proof of stake is doing a lot of stuff to change the on-chain stats. It's going to be the same for ETH. Any of the proof of work data is then just different. It's a different chain. It's going to take a year to normalize what proof of stake transaction counts look like, because previously it had nothing, right? It just had buy and hold potential. Now it has buy and hold and collect interest, and that shows up on on-chain data. Active addresses, all-time highs. Again, no surprise there when we're looking at the staking wallets rising to all-time highs. NVT, which is an inverse metric of economic utility relative to price, had been rising, is declining, is near all-time lows. So collectively, the on-chain stats for this in a vacuum actually look pretty good. I can't deny that. There's no other way to slice it. Transaction counts all-time high, active addresses all-time high, NVT falling and near all-time lows. If we look at MVRV, which is a measure of market cap versus on-chain activity directly, in general, most coins top out at a 2x multiple. Most recently, we hit a 2x multiple, then started declining on the MVRV, made another 2x multiple very near the top, and then currently we're at 1.5. So we've seen this quite a few times where we top out super early in MVRV, and then the on-chain stats catch up seemingly to market cap. It's typically bearish, but doesn't always lead to reversal. Like here, it didn't, it made a higher high, it retraced a little bit, but then we kept going again. I don't even know if there's a signal here other than if this sucker is above 2, it says be careful, right? Whether or not this is a bull div or a bear div, rising prices, falling MVRV, I'm not so sure. The buy zone looks like to be sub 0.6, around 0.5, 0.4, based on the levels here versus price. But with things being so close to 2 still, you got to wonder how much upside this has in it if an MVRV above 2 is very close to the top. Now, if they get smart contracts, if on-chain activity picks up dramatically and market cap lags on-chain activity, then MVRV will stay flat or decline. But otherwise, as bullish as everything else looks, this kind of scares me how high MVRV still is. Cardano is part of a few funds. This is the large cap fund, and they currently have a 5% share in Cardano, 65 BTC, 26 ETH. The Bitwise 10 also has a 5% share of Cardano. Because of its market cap, it gets listed and weighted highly in stuff like this that is sorted by market cap. Most people who pay attention to market cap and know what it is and means realize that it's a very flawed metric. You can mint 500 billion tokens. This isn't what Cardano did. I'm just saying you can mint 500 billion tokens, sell some of them for a certain amount of price, and then slowly drip the rest out over time, and to some degree inflate your market cap, right? Hard money versus the hard money of BTC and mining it over time versus pre-sales and ICOs, that sort of thing. That's where the market cap stuff falls apart for a lot of people. Of everything listed here, only Bitcoin and Litecoin weren't ICOs. Everything else was an ICO or a fork, Bitcoin Cash, a fork. UniSwap was an airdrop. So again, I'm not just an angry Bitcoin maxi. I'm just pointing out the obvious here. A lot of the market caps don't make sense, especially when they have very low utility. You could argue Ethereum's market cap makes more sense because it has the on-chain activity to back it up, whereas a lot of these others just don't have the on-chain activity to back up the market cap. Looking at Cardano's Google Trends last month, or the beginning of this month, it was rising, reaching near all-time highs that pulled back pretty significantly. So to me, if you plop price onto this, it does look somewhat of a bearish divergence. Higher highs in price, lower highs in Google Trends. It might sound silly to say that, but this does measure interest, search volume, new users, new money, that sort of thing. Flipping gears to technicals, this is the 5200 EMA yearly pivots volume profile, volume per day down here, and RSI. So you also had a bear div in a volume here, successive higher highs and lower volume. The 200-day moving average is around $2, 180, somewhere in there. It really needs to hold that level to maintain the bull trend, and this looks strong, looks fine, doesn't look at risk of imminent reversal. The worst thing you can see here is a death cross. You can see how high it is above these yearly pivots. At some point, they become useless because it busted through all of them super quickly, very early in the year. So then you have to rely on monthly pivots or map out R6 through 10 yourself, right? This could go on for infinity. It's just based on highs and lows of the previous year. I left it on here just to show how overbought it is relative to the yearly pivot expectations. To see something break the R5 in a year on legacy markets is super rare. On crypto, it's much more common. There's also not a lot of volume support until sub 10 cents there. On the cloud, it's about as neutral as I can get. Bullish TK cross, bullish cloud, in the cloud, and you're either waiting for a bearish TK cross with price below cloud for a short entry, or you're waiting for a bullish TK cross with price above cloud for a bullish entry. And some of the fundamentals look super strong, like the on-chain stats. Some of the on-chain stats versus market cap fundamentals look less strong. Google Trends less strong. So it's a bit of a mixed bag on fundamentals. Ultimately, what I'd want to see here is a bullish TK recross with price above cloud. Similar to this, hopefully a little cleaner, because that would represent a new long entry signal. So if you're bullish, you just want to see this, again, to get zeroed out, let the cloud do its thing, let the Kumo twist do its thing, whatever needs to happen. You're just looking for a fresh entry, I think, at this point on the cloud on the daily. ADA BTC hit the 3618 from the bottom, measured from the horizontal resistance at around 1900 sats. This thing just looks way overcooked and done to me. Triple top, 3 drives, bear div. Again, I'm not just an angry maxi. The technicals don't really support continuation here. If anything, you'd be looking to buy it at the 200-day moving average, somewhere around 4K sats, not a lot of volume support until 1300 sats. Staking obviously helped propel price very quickly here against BTC. Against ETH, it's a little less impressive. Still looks bullish. Doesn't look as toppy as it does against BTC. If you start to see DeFi pick up on ADA, NFTs pick up on ADA, then I'd expect this chart to do rather well. But until that happens, I can't think of a fundamental reason to own ADA over ETH if ADA doesn't implement any of the new DeFi stuff that ETH has, right? ETH is where all the playground and fun is happening, or layer ones in bridging. It's not ADA. Even Tezos, to some degree, doesn't have what ETH has, but it's got more than what ADA has, And eventually, once all this stuff goes proof of stake, it's all going to be competing for attention, eyeballs, money, FOMO, hype, buy and hold mentality, and they all can't do well against each other. One's going to win out. It's probably a zero-sum game for most of the proof of stake stuff. Let me just mention the ETH BTC fund and DeFi portfolio I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM, performance, allocation, all the vaults I'm in here on Compound, Aave, and Yearn, as well as the trades in the trades tab down below. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.